The spot ETFs have opened up a gateway for institutional capital to flow into the Bitcoin ecosystem. The demand for the spot ETFs, especially the new ones, net, has been far in excess of the supply from the miners every day. In some cases, up to 8 to 10 times as much demand as supply every day. This is a rising tide that's going to lift all boats. MicroStrategy has got a levered operating strategy for Bitcoin. But if you look at what these spot ETFs are doing, they're facilitating the digital transformation of capital. And every day, hundreds of millions of dollars of capital is flowing from the traditional analog ecosystem into the digital economy.
Michael Saylor, the founder, former CEO, and executive chairman of MicroStrategy, a provider of business intelligence, mobile software, and cloud-based services, holds a notable position in the crypto world. MicroStrategy stands out as the publicly traded company with the largest Bitcoin holding on its balance sheet. Since adopting its Bitcoin strategy in 2020, MicroStrategy has steadily increased its Bitcoin holdings. From an initial purchase of 2,454 Bitcoin for $250 million in August 2020, the company now holds approximately 190,000 Bitcoin, with a total purchasing price of around $6 billion. In a recent interview with Bloomberg, Saylor reaffirmed MicroStrategy's commitment to continue buying Bitcoin, despite competition from the 9 spot Bitcoin ETFs launched by industry giants like BlackRock and Fidelity. While recognizing the challenges posed by increasing demand, Saylor remains bullish on Bitcoin, especially with the upcoming halving event and rapidly depleting Bitcoin balances on exchanges. The interview also features insights from Bloomberg ETF analyst Eric Balchunas, discussing the significance of Bitcoin ETFs and their potential impact on Bitcoin prices in 2024 and beyond. Both Saylor and Balchunas, seasoned experts in their fields, provide valuable perspectives on the future of Bitcoin and the evolving crypto landscape. Make sure to watch the video until the end to stay informed about the latest developments from Saylor and Balchunas. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Any point would you sell? When would it make sense to take profits there?
Well, I've famously said I'm going to be buying the top forever. Bitcoin is the exit strategy. It is the strongest asset. So what we see right now is that Bitcoin has just emerged as a $1 trillion asset class. And it's alongside names like Apple and Google and Microsoft. But the difference between Bitcoin and the Magnificent Seven is Bitcoin's an asset class. It's not a company. There's not enough room in the capital structure of those companies to hold $10 trillion or $100 trillion worth of capital. So Bitcoin's competing against gold, which is 10x what it is right now. It's competing against the S&P index. It's competing against real estate, $100 trillion plus asset class, as a store of value. So we believe capital is going to keep flowing from those asset classes into Bitcoin because Bitcoin is technically superior to those asset classes. And that being the case, there's just no reason to sell the winner to buy the loser.
While not being as prominent a Bitcoin investor or advocate as Saylor, senior Bloomberg ETF analyst Eric Balchunas holds a significant appreciation for Bitcoin ETFs and their impressive performance since launch. Alongside his Bloomberg ETF colleague James Sart, Balchunas diligently tracked ETF applications last year until the SEC granted approval on January 10. Since the inception of Bitcoin-based exchange-traded products, Balchunas has consistently provided updates on their performance, comparing them to existing ETFs and those launched in January 2024. In one of his recent Twitter updates, Balchunas highlighted that all Bitcoin ETFs rank in the top 20 among the 65 ETFs launched in January. Notably, Bitcoin ETFs accounted for only 14% of the total ETFs launched but represented over 83% of the total assets under management at the time of the post. In an interview with the Rational Reminder podcast, Balchunas delved deeper into the success of Bitcoin ETF launches and their implications for Bitcoin. Here are some excerpts from the interview.
If you isolate the newborn 9 away from GBTC, anyone and their mother would be like, holy moly. I mean, it's literally the most successful launch of all time. I mean, let's say there's 20 stats you could use. This would be 15. It would be number one on 15 categories. The momentum these things have early on is very positive. And you know, the BlackRock's got advertising campaigns. Larry Fink is out there saying this is a new asset class. Fidelity is involved. I mean, that's all you have to do is just sort of trust behind these people who have strong reputations for successful products. Give it time. And these products already have two things that you need for foundational ETF category growth: volume and low fees. Those are the two most important things for the fish to come bite. So institutions like volume, advisors like low fees, and they each both like some of the other. They have both in spades. So the stage is set. The wholesalers are going to do their thing, and just wait. So anybody out there with the underwhelming take, I just think it's going to look like an idiot. Somebody asked me earlier in an interview, how many of these will be here next year? I think all 11. I think all 11. Now, what you could find is some wacky things come out that come in and close within a year. You could find something like carbon credits plus Bitcoin, you know, or 2.2x leverage Bitcoin. They're going to throw a bunch of crap at the wall. Some of that will just fall instantly into the gutter. A couple things will make it, but my guess is these original 11 will be here in a year. BlackRock or Fidelity, there's only really room for one liquidity king. And they're both trading about $200-300 million a day. So it's interesting. Normally, the first one out is the liquidity king because they had their market for them. This is a race. So I've never seen a tie like this so close. I do think iShares probably edges out over the next year. I'll tell you why. Because Fidelity doesn't really have any big liquid ETFs. iShares has like 50 of them. And they're known amongst the trading crowd and the institutions. So I think their branding and work in this area will pay off in the end. And I think IBIT becomes like the big one with the most volume and the options activities around it. Not to say all the other ones can't be big, make money, and have a great life, but I think IBIT's probably 2-to-1 odds at this point, so the heavy favorite to be the liquid one, you know, that if you're a pension plan and you need quick exposure, you would use that. Even if there's one 5 bips cheaper, they're like, I don't care, the liquidity is most important to me.
What do you think being allowed in an ETF wrapper does for Bitcoin?
I mean, look, this is like, you know, one of my metaphors is when the Beatles went on iTunes. You know, the Beatles held off. They wouldn't go on iTunes for like 5 or 6 years as iTunes got popular. So younger people would not listen to the Beatles. I mean, it was that simple. They finally went on and all their albums went to number one. I mean, it was like, just like that, everybody bought their albums. So this is a similar thing. I think instead of, it's just reversed. It's the older people who will think about buying it just because it's in an ETF wrapper. The SEC approved it. ETF's got a prospectus. They're all 100 pages, a lot of legal lawyers. BlackRock's trusted. That's what it means. It's now in a trusted environment. And ETFs to me are bridges. They're bridges from any world, and they're convenient. So they're convenient, they're cheap, they're easy to trade, they're on every exchange, they're convenient. I said that twice. Convenience is a very underrated benefit of ETFs. Any business, you make something convenient, people will buy it. I mean, there's single stock ETFs. Think about that. Like, that shouldn't sell, but one of them has over $1 billion. Just telling you, man. You know, you make something just an inch more convenient, and people will buy it. Everybody's lazy. So I think in this case, you got the lazy factor, and this is really a pain in the ass to go do Bitcoin for most normal people. They just don't want any part of the wallet and all that stuff. So this is what that means. It puts Bitcoin into the preferred vehicle, and as Michael Saylor called it, the plumbing of the traditional finance world. And that is powerful.
During the interview, Balchunas elaborates on the rising popularity of ETFs among wealth advisors and investors. This popularity stems from the convenience and ease of exiting ETFs compared to other financial vehicles like index funds and traditional mutual funds. Additionally, ETFs offer greater tax efficiency, leading more than half of financial advisors to prefer them over mutual funds, as indicated by a late 2023 survey from ISS Market Intelligence. Balchunas emphasizes that Bitcoin ETFs hold even more significance because they bridge the gap between the traditional finance world and the rapidly evolving digital economy. He discusses the impact of this convergence of two previously distinct worlds as the interview progresses.
I've been thinking about this because when the filings first came, especially BlackRock, I'd see in my comments, like, you could see it between people and within a person. There's the devil and angel. It's like, number go up, yay Larry Fink. Then it's like, wait a second, do we really want to hand all over Bitcoin over to Larry Fink?
Right.
So, I don't know, man. I'd almost turn over to you, but I do think that the mainstreamification of Bitcoin is probably necessary if you do want some growth on the price. So the ETF, I think, can jumpstart a lot of good things that will help it be a very consistent asset class. Now, the more it gets legitimized and mainstreamed, does it lose its appeal amongst those who like that it's punk rock and like that it's outside of the system and a little bit of a middle finger? You know, I always thought if Bernie Sanders won, would Bitcoin be as big? Because, you know, you got the same kind of politicians from both sides. Generally, you know, a lot of things are run the same way, but Bernie was like, I want to upend everything. And Bitcoin's a little got that vibe, right? It's outside of the whole system. It's not like messing it up from the inside. It's like outside. Whereas you would say the current politicians are like, let's make incremental changes from the inside. And so to me, going into BlackRock and these companies is a little antithetical to that outsider thing. But again, if your goal is to have it grow and be legitimized and, you know, have a chance at being a currency, because a currency I don't think can be that volatile.
Right.
So this could also bring the volatility down if you have more people buying and holding, less more people into it. It could help with the volatility as it matures. So I don't know is the answer, but I will say when you see Larry Fink going on Fox and saying, I love this, by the way, he was being asked like what by Andrew Ross Sorkin, like what's the pitch here? He's like, you know, if you don't trust your government. And I was like, whoa, this is crazy. So this is going to take us a couple years, and I think we're going to look back and go, how wild was that? Like those moments were like the early days of this whole thing, because, and then the same day you see a clip of Jamie Dimon calling it a pet rock, and that is just fascinating to me. That's why I spent so much of my mind on this, is because even though Bitcoin ETFs probably make up 1 to 2% of all ETF assets eventually, which is pretty good. We're talking 100 to 150 billion. I spent a lot of my mind on it because of the fascination factor is a 10 out of 10. I mean, it is so unique, and there's two worlds colliding, TradFi, DeFi, but also culturally. There's a cultural collide and a generational collide. And I feel as a Gen Xer, I'm generationally in between all of those worlds. And so it made me feel like I have an interesting vantage point to work on this, and James as well. He's a little younger. He's probably more into crypto. I'm like a little more boomerish. He's a little more crypto-ish. But the two of us together could go in between the worlds, and it's really interesting. And honestly, I think one of the things that I thought about the crypto world I liked so much was the people and the memeing and the sense of humor. And I really think that TradFi culturally could benefit a little, you know, from this world. And obviously there's certainly things you could benefit from the blockchain, but just culturally, and just learning the skepticism that younger people have for the 60-40, because I still love the 60-40. I think both worlds can learn from each other. I guess that's my point.
Saylor and Balchunas share a similar perspective on Bitcoin ETFs and their significant impact on Bitcoin prices and the broader digital assets industry in the foreseeable future. Saylor, in particular, anticipates that the increased demand, compounded by the upcoming halving event in April, will greatly influence Bitcoin prices. This surge in demand is expected to fuel further price increases for the leading digital asset. Feel free to share your thoughts on their outlook and predictions in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.